Testing, 1, 2, 3. Testing, testing, testing. How we doing, guys? Somebody give me a sound check. Let me know what you hear. Miguel, how are you, my friend? Stay safe, please. All right, good morning, guys. Good morning, good morning, good morning. Good morning. Let's see who's in the room here yet. I'm going to let everybody crawl in. Give me just a sec here, guys. Oh, actually, we can do it this way. That's fine. Okay. All right. Good morning. Good morning. Good morning. Good morning. Quiet morning today, but I had a few opportunities. I took a few nice trades. I'll show you what I'm doing. First of all, let me just see I see some new people here. Identify yourselves. Say hello to me in chat. Ask Boris. Tell me if you're new, if you have no idea what I'm talking about. And you don't know anything about the system, because I'll be happy to bring you up to date. Krasi, good morning. Krasi, did you trade today? Did you have any setups? There were a couple of good setups today. Good job. Good job. Good job. Okay. So, let me launch the CFDs. Sorry. Let me launch the CFDs. I've actually got into this rhythm now, which I sort of like, where I'm in one account, I'm trading NAS on like the small contract size, just really, really consistently. And then in the other account, I'm trading the Dow, the YM, on the large account size. I was trading actually the NAS on the large account size there too, but like that's actually we didn't get a chance to talk about that. I actually had another thing I want to talk to you guys about. So a counterintuitive idea for how to handle risk, right? Take the larger account and trade that with the smallest, with the most appropriate risk. So just let me give you an idea. So this account only has about 5,000 in it. And where is it? Where are we? And I'm trading this on the micro NAS, which is like I think a 16,000. What's the so times 20? Let me see. Let me just I always forget. 11. What's that? 11,000 times 2. About 24,000, right? So it's about 24,000. So it's only about 1 to 5 levered on this account, right? On the other hand, I open up this tiny little account and trading a big YM contract with it, which only like basically allows me to just trade one contract. I think margin is $5 to $6, like $1,000 for this on the small account. So like, what's the point? Why trade the small account on the large contract and the big account on a small contract? And the reason I'm kind of doing this is because, and I find at least for me, I think I find it kind of interesting. You want to spec and you want to double your account. Do it off of a really small base, because you're going to blow it. If you're going to blow it up, you're going to blow it up, right? But you are going to risk essentially the value of the account, or maybe 2/3 of the account before you get margined out. And what that does is it prevents you from over leveraging yourself in a stupid way. Because if you put a lot of money into an account and trade at a large size, you'd blow it up, because you double. You would have the opportunity to double, triple. In this particular account, I cannot go more than one unit of large size. So it creates two natural stops for me. One, the margin stop if I'm like doing something stupid, and two, the fact that I can't parabolically add, because the biggest losses always come when you're adding to a losing trade, right? But what it does is it creates that element of excitement and element of possibility on that small account that you can then experiment with without really a lot of risk. On the other hand, that speculation feeling completely is taken up by that small account, and it allows you to just focus all of your better impulses on the larger account and trade that a little bit more properly. So like that's my counterintuitive idea of you actually trade small instrument size to the larger account and large instrument size to the smaller account, because all your bad habits should be in the smallest account. Kind of like, and it actually has been working. So what's happened is that because I'm limited by size and everything else, I have not blown up that small account. And that small account has actually grown a little bit, and it's exciting. And you know, it's certainly improved this account. Like this account has been like, I think this account's been, let me see what the history on it is. Yeah, this is just today. This is just today. But like, even if we take it, let's see, custom period, start of week, last 3 days. Oops, sorry. Last 3 days. Yeah, well, you don't count the two. That's actually added. I just added the equity to it. But you basically net out the two, and it's a very, it's like 3 days, very, very consistent trading. No over leveraging, single size entries, no stupid trades. You know, you see like all the stuff that's and that's just all good habits on a proper account. So it's kind of interesting. I thought that's an interesting little trick that we can do. Now, while we're waiting for the open, let me see if there's anything going on here. Really not much. There is I guess I could have taken this NAS trade. Let me see if I'm kind of fooling around here. I'll hold off. You know what? I'll hold off because this is actually a new slice. We've had a downward slice here going on, and I did take a few trades back to the upside, which I love. This is actually brand. We went up, came back down. It's a brand new slice. I really want to give it 2 bottoming waves before I want to come back and trade it back up. But remind me to come back to the idea of mean reversion trade, because that's such a good trade in quiet, sloppy markets. It is such a good trade in quiet, sloppy markets that, you know, I highly recommend you employ it. I've been doing it pretty well, but let me come back to that. Now, the one thing I wanted to do before the markets open up, and I promised this to somebody else, but let me pull this up. Where is my thing? I want my Bitcoin chart. Here we go. Okay, so this is my YM chart. Let's go to Bitcoin. So a lot of people are getting very excited about Bitcoin, right? And rightly so. It's been a great trade, but I don't think anybody realizes at how great our strategy is for trading Bitcoin, right? Now, let me preface this by saying that this is the 1-minute chart on Bitcoin, and it is impossible for anyone to trade this the way we trade NASDAQ, or the way we trade the Dow, or the way we trade DAX through your CFD broker, because your CFD broker is going to have ridiculous spreads. Like, even what's OANDA right now? It's 40 to it's a 75 point spread on Bitcoin, right? Which is ridiculous, right? So the only way to trade this on like a 1-minute chart is to trade this through the Bitcoin exchanges, either Coinbase or BitNext. And those exchanges, I actually looked it up. I was curious today. So one Bitcoin is 18,000. They give you 20% margin. So you effectively need to put down 1/5. So like, 3 to 4, basically you need about $4,000 to $5,000 to trade one Bitcoin, one size. And I think you actually probably could trade fractional. I didn't even look, but you probably could trade fractional. But there it's like a true exchange. And there the spread is just $1, right? I mean, you can't trade something with a $30 spread. You have to trade it with a $1, $2 spread. But if you do it, you can see how well our strategy works. You know, how well it works just on all these you know, on all these trades. I mean, it's obviously not going to work all the time, but like this is a trade that's misses, right? So you have the oh no, sorry, never mind. That's not even a trade. That's not even a trade, right? So that's not a trade for us. We're looking for failure trades. So this would be this trade over here. So like this trade has a low of 18, and this takes out the 18s, and you see like within 1 minute it goes down to like $40, $50. Now the thing is, Bitcoin is insane. It does travel $50 a minute. So trading on a 1 minute chart is really insane. But it's super interesting. Like I guess you would trade it with a $50 target, $100 stop. That's how, on a 1 minute chart. On a 1 minute chart is how I would trade it. That's how much volatility there is in Bitcoin to trade. But you can trade it that way. You can also trade it through mean reversion, which is like, you know, and by the way, my favorite is a instrument that is truly in an uptrend, highly bid. Then almost every mean reversion trade to the upside, not the downside, but the upside, is going to work for you. So in this case, this green candle overtakes this one after a sell-off. You get long at 60, and there is 20 points of trade over here, right? Boom, 20 points of trade. We go back again, go back again, go back again. This candle overtakes the red candle, 49. It only goes like, you know, 10 against you, and it has 40 for you, you know, 40. So you can scalp Bitcoin all day long, but you have to do it on the exchanges. On the other hand, you can also trade it, and this is where it gets really interesting. Look at how clean and pure our strategy is at getting you longer term trades. So on a 1 hour chart, I absolutely think, you know, you can't get away with anything less than a $400 stop and a $200 target, right? Somewhere around there. Maybe even, I would even say you could probably even run this with a $500 stop and a $400 target, which is, you know, quite a lot. But in these days where there's a tremendous amount of volatility, you could do it. I really like on the longer term charts, I really like the 1.5 to 1 ratio. So maybe even $300 to $200. Like on longer term charts, the risk reward ratio actually compresses in your favor, and you're still going to run this very well. I've tested this like on non-volatile trades, like in euro and in NAS, and anywhere at like 1.5 to 1, you are running 65% accuracy. Your P&L is what was it, like 23 out of 36? Yeah, your P&L is actually very good, with as close as maybe even 1.3 to 1 risk, meaning that so I think I was running it like 500 to 400, 500 risk, 400 target. All of those things were working very well. So that's the beauty. On the short-term time frames, we really need to do 1 to 2 risk, but on longer-term time frames, we can really compress ourselves to much shorter risk, and it works super well. So, you know, entry here, boom, target. Entry here, boom, target. Break here, boom, target. And you see, by the way, of course, the super long upward trend. That's just, this is a 1 hour chart. That's just so helpful. And you see how it completely catches all of, you know, taking out the highs here, taking out the highs in 4 or 5 sequences. Every single trade is a positive trade. The way we trade, our setup is literally the single most accurate way to trade Bitcoin in an uptrend. Like right now, just within the last, if I go back to the beginning of November, right? There were, let's just go back to the beginning of November 1, right? And we're looking for our setup. So winner, no trade because it doesn't take out the high, right? This ticks you in, and what do we say? We said about 300, 200, so 1546. How far does it go? This is probably, I would call this, no, maybe it doesn't, maybe you survive it. It's 143 at, no, if it's a $300 stop, you're blown out. Okay, so 1 winner, 1 loser, 2 winners, 3 winners, 4 winners, 5 winners, 5. So 5 to 1. You know, with a 2-3, like the ratios are just insanely positive in your favor. So if you just go 5 divided by 6, that's an 80. Let's say it's an 80% hit rate against a 2 divided by 3, about a 3 divided by 2, 3 divided by 2, about a 1.5 risk, right? So 1.5 risk reward ratio against an 80% hit. I mean, anywhere above 65, you're winning, and this gives you a 15 percentage points of error, margin of error to operate it. It's a super strong structure. I'm actually curious. Let's just go back to, see if I can go back to October, right? Even here, winner, no trades. Even in choppy markets, we're not triggered any. We don't trigger any trades here. Winner, just continuously. You're not getting. The thing about this is obviously on a 1 minute, on a 1 hour chart, you're only going to get maybe 1 to 2 signals every 2 or 3 days. But those signals are just going to be killer. And if you're trading in Karen fashion, where you're trading short exit, long exit, you literally your risk reward becomes massive, because if you're risking 300, you get 200 up here, break even. The next you're targeting 400, then your P&L really swings positively for a very strong move. Boom, winner. Our strategy was born for high continuous positive trend assets. And we've been talking about Bitcoin being a positive trend asset for a couple of months, because it really broke out, on a daily basis, a long time, we talk. Oh, Jesus, sorry, this is I can't do my, this is a very ugly chart because of all the coloring, but you get the idea. This is the daily basis. Look at the massive breakouts that it made with consolidation, a little bit of negative movement over here through April, and then just very strong breakouts here, where you've been able to do this. I'm actually, what is this? This is the negative slice. Oh, no. This is, oh God, this is, I'm sorry, I'm looking at this. Okay, yeah. This consolidation from September, and then a massive breakout, right? It's been really great. Same kind of a thing here. Consolidation in July, and then a big breakout at the beginning of August. All of that would have really worked super well for you. And when it's consolidating, you're really not getting into trouble, because you're not triggering the highs. And since you're not triggering the highs, you're not getting a lot of false positives. So my point is, it's just an incredibly powerful trading strategy for Bitcoin if you guys are trading. And obviously, this is adapted to the more to the brokerage structure than the exchange-based structure. But if you want to trade exchanges, the way I trade, futures, you can trade on Bitcoin exchanges, and it's really cool. Rob says he's a holder and he's going $20 short term and to the moon after. Yeah, I mean, it may, but my point is, we're in the business of I'm not making an investment argument. I'm making a trading argument. I'm just saying that my strategy is the single best trading strategy for trading Bitcoin, because Bitcoin now is a highly trending instrument. And my strategy is just eats up those pips, right? Just eats up those pips without any retrace. The point is, if you're holding, I'm sure you have 20%, 30%, 40% drawdowns when the thing corrects. We're not in the market when it's correcting. We're only in the market when it's running, and that's very attractive to a lot of people. So if you are employing the scalping techniques, the day trading techniques that we're using, you can completely adapt those to the 1 hour chart of Bitcoin and convert them into truly interesting trading possibilities. I'm going to preview this, since you guys always get the preview of what we're doing. We're going to do a course, like an ultimate trading course, at the beginning of December, right? And the algo that automates the the structure the way I showed it to you, the complete automation of the structure. We just finished that up. That's going to be available in the course. So those of you guys who are lifetime, obviously going to get it. Those of you guys who are new, you can just sign up for the course and you'll be able to get that full algo, which you can then apply to Bitcoin. I'm actually going to, I back tested almost all of the stuff without back testing Bitcoin yesterday because I was, just testing all the logic. I'm almost certain the Bitcoin this year would have performed well because everything else that was even modestly trending did great in that particular structure on the 1 hour chart. All right, what do we got here? We got nothing going on. We got about 9 minutes to market. Very, very slow markets. I'm watching DAXI. There's nothing going on here. I'm probably going to experiment a few things just for to show my mean reversion trades if I get the setup. Now the DAX right now is very, very negative trend, right? And I'm going to be watching this just at the beginning of the market to see if I get a mean reversion trade to the upside. If I get the candles closing through the highs or through the opens of the reds, there may be an opportunity here. I'm a little leery, the reason why I'm leery of doing it is because, as I said, it's just it's 5 minutes before the open, so we're always going to get open volatility. But that particular setup, and I actually, we got about 5 minutes, so I might as well just take you through it. The particular setup of just like buying the turn intelligently, is such a good strategy, especially, and this is really, really good to see. Let me just get big here. You can see me buying a turn here, buying a turn here. It's actually a really great strategy in these kind of flat oscillating markets, right? Oscillating markets with a slight upward bias, right? So if we start, as we did, like in early Europe, with we were like up 20 basis points, up 0.2%. We're basically positive, right? And when you're positive and you don't have a lot of volatility, then trading. And let me just get big over here and show it to you. And this only works to the upside. If the instrument is positive, so NAS was positive on the day, I only want to take, because this is clearly outside of the hard rules that we have. I only want to take the trades from the long side. I want to take long side turns. In other words, what I want is selling, so everybody's positioned short in an upward trending instrument in a quiet market, and then every turn back to the upside, I have a lot of confidence. For just I was trading this with a 5-10. So we have turn. This candle beats the open of the red. That's our trigger right here. Boom, winner. Right now we just simply patiently wait. Of course, we can trade our classic breakouts over here, maybe even over here. That makes money. That's perfect. That's great. But then we come back and we're looking for for reversal turn trades, right? And here here we're kind of consolidating. Now we go back over here, right? Now we go back over here and we're looking for reversal turn trades. And what you'll notice here is you really, you get like maybe one fake out signal here. This was the one fake out signal here. So if you took this is a little bit early. I wouldn't have taken this, but it's a little bit early on the turn here. But you would have been a legitimate signal that you would have gotten faked out. But then the next one, boom, winner. Next one, boom, winner. And this is the thing, by the way, that even if you get stopped out on one, you have to be comfortable and confident because the next one, will turn, and the next one will turn, and then you can just trade the turn for just a little bit longer. Let me just give this to you here. So where was this? So now you get two arrows down here. Nice downturn. This turns, right? This beats the high. Boom. This is not a lot. This one turns. I actually was hitting myself over the head for missing this one because I was like, I'm not sure. It's too close to the open, and it works. The point is, like, if you just took this sequence that I just showed you in essentially a mildly positive market that started to sell off a little bit into the New York session, right? That upward bias, especially remember the markets are equity markets are always upward biased, and nothing is more upward biased than Nasdaq. Even with that one miss that I showed you, that was 4 winners, 1 miss. Like that's an 80% win against a 66% break even. So if you're trading with like a 10-5, which is what I was just doing in a slow volatility environment, and that's fine. And you could even, if you had a little bit of balls here, you could have even taken this one here. What is that? That is 58, and you're just looking for 63. And I think you almost would have made 63. You almost would have made 5 here. You probably will make 5. So now you're talking about, instead of 4 out of 5, you're talking about 5 out of 6. Now you're like at 82% win rate on very, very little risk. And you're just collecting, you're collecting pips. So like if you did a 5 out of 6, you're net 15 for the day, right? 25 minus 10. 15 NASDAQ points for very, very little risk and, just quiet, continuous trading on the scalp side. You can, if you make 20, 30 points a day, you're effectively making 400 points a month in NASDAQ. That's massive. It's just massive. So that kind of a scalping idea is kind of very, very cool when you're setting it up. Now, however, we got 4 minutes to the open. We're going to do nothing. Oh, and in the meantime, by the way, also, there were plenty of good. I actually did this on my YM. Let me show you. Where's my YM? Oh, here it is. Okay, so this is the Bitcoin. So let's go to YM, show you what I was trading on the 1 minute chart. You can see the marks on my charts here. Yeah, here's the mark. So this is the turn in the YM, right? 2 sells. So now I'm ready for I'm ready for the turn. The green beats the red over here. I get short over here. Boom, nice clean 10 points. This I'm trading with 10, 20. Then I had a classic. Where's my breakout? I totally forgot where it was. Oh, here it is. Okay. Let me get big here. It's hard to see this unless you see it big. Okay, so this is the classic right over here. We have a reverse sell. That gets beaten. I get long over here. Long over here. Boom, 10 points. Nice, clean stuff. And I could have done more. So like within even a quiet market, if you stick to our classic rules and then do a little bit of mean reversion scalping, you're talking about like, 30 points in 3 hours of just very, very low stress, low risk trading. You're not risking 50 points per trade to achieve that. It's, I think, super tight. The key thing that, by the way, and this is, I'm definitely seeing myself improve on this, is you notice that let's just even look. This is a good example of hopefully me doing the right thing. And we got about 1 minute, so I will turn back to the trading. But look at the volume over the last 3 days. Look how much volume I'm doing versus volume today. Right? Look at that. Look how much more controlled that is. That's, by the way, commissions and stuff like that. So those are not actual losses. Just nice and tight, nice and tight. Okay, let's look at the open here. Let's see what's going on. Lately, opens have been kind of quiet, right? Dow looks like it's breaking to the downside. It's definitely breaking the buy candle, right? So, but it's it's the open, so you don't want to fall into that volatility. But that would essentially trigger a sell signal for us right now on a Dow. Let's just actually watch this. I don't necessarily really want to trade. Yep. That's probably going to work. The sell signal was at around 77, and we're looking for 67 on the move, and it's popping. Let's see, it's a lot of volatility. 67, there you go, and that works. That would have worked to the downside, right? So if we took that trade right off the open, off of the classic move over here, that actually would have totally worked. Okay, what do we got here? NAS going the other way, trying to reverse itself. Remember the first 5 minutes. Remember how I've gotten once burned, twice shy. I got tricked into kind of following price action in the first 5 minutes, and it's always kind of reversed on us. The true price action takes place usually in the second 5 to 10 minutes of the market. So let's watch the true price action a little bit later. Let's not chase anything right now. But that was a classic, classic clean trade. I don't know if anybody did that. Did Connie, Karen, anybody take that short Dow? Karen loves to take those things on a 1-2 basis. Did you take that trade? Yeah, too late to get in. I was just, watching. That's true. Yeah, I know. It was like we weren't really set up for it to trade it properly. But nice, it was a nice clean trade. Yeah, this Karen loves that the opening range trade where she just like, and the thing is, Karen, the opening range trade with a sessions confirm with our signal confirm, that's even better, right? That's even like really, really clean. And that really worked nicely for you. Good for you. All right, so she did a good job on that. Okay. So I'm watching the DAX. And again, not a classic trade, but I'm kind of tempted to do this. I got 32, 33 seconds. The DAX is turning the corner on the red, right? And I'm kind of tempted to trade that to the upside. We're going to give it 22 seconds. If this holds the line, I will scalp this to the upside to see if I can get anything done in the DAX right now. But it's got to hold the upline. It's got to hold the open of the red. Got 8, 9 seconds, 4 or 5 seconds. Let's see if it can hold. All right, you know what? Okay, 51s, right? We got 51s. All right, let's give that a shot. Maybe it holds. It didn't hold beautifully, but it kind of did break through the upside. Let's see if this can hold. Not our standard trade, but just a scalp on the open here. Let me see if I can just make this up and just see if I can putz it around a little bit. See if they're gonna run it, I just want them to run it really fast. All right, I'm going to take it at 5. Good enough. That probably would have hit 7. But then, like a good quality, clean little, and it's probably going to go higher for us. But just in that, since it's a scalp trade, I didn't want to putz around too much with it. But like it's actually gone full 10 for us, which is great. And it's just like you see that. I love that turn. That turn is such a classic clean trade. And I'll explain to you like why I love that trade. Because what happens is everybody is mispositioned, right? Everybody is positioned short at this point, right? So all the sellers have sold. What do they got to do? Like there's no more selling at this point. The easiest trade, even though this is trend, the easiest trade for the short term, for just the most immediate turn, is to the upside. And then if you get lucky and it's actually a complete reversal, then you've literally picked the bottom for a possible 5x, 10x move. Now I don't trade the 5x, 10x move because it's just not my personality. But the point is that kind of a turn trade is exactly what what we're built to do, what my setup is built to do. And now I get the NAS. starting to turn to the upside. We'll watch the NAS a little bit here. Let's see if we got anything going on over here. It's a big, big candle. I'm not making the mistake of chasing the big candle. I think I'm going to let this consolidate a little bit. If it's going to go higher, it'll go higher over the next 10, 15 minutes, and there'll be plenty of opportunities. If this is just a short covering squeeze, I'll let that squeeze go by. So the other component that I like about the turn trade is when it's tight, like when the actual candles are small, when you're covering, when the movement is actually relatively small. Because what I want is a tight candle with a huge explosion. I don't like the long candle, because, as I said, a lot of the profit potential is already embedded in the large short covering squeeze, and you see it's having a harder time going higher at this point than if it was. So to me, the favorite trade is this one, where I have a small cover and then a big explosion afterwards, which I obviously can participate in, versus just buying the top of a big reversal candle like this, right? I mean, Dow is also just showed the same kind of pattern. I just wasn't paying attention to it on the scalp pattern. Now, none of this is our classic patterns. None of this is our structure patterns. But these kind of short-term counter trend scalps are very useful in complementing our day trading strategy. The key thing is you got to watch them, you got to time them, and you got to make sure that you're doing it right, in a sense that you really have to make sure that the reds are completely enveloped before you take the trade. Don't ever take the candle midstream. And if the candle runs away from you and it's like super long after that, there's two ways to do this. You can just pass the trade, which usually is always a good idea, or you literally wait for the retrace moment, because you want to try and buy it maybe 20% or 30% underneath the close, like right over here. So at least you're positioned correctly. There's always, I notice with all these trades, there is the timing and the positioning, and you need to get both relatively right in order to be in good shape. Now, for our classic trades, we don't have to worry about the minutiae of details, but when you're scalping, you really want to get both the timing and the positioning right, so that you have optimal possibility for reversal. So like this was a good, clean 10-point reversal over here, right? So this is like a really, really nice trade. And whereas you see the NAS is going to consolidate, right? And there may be I may even get a sell candle, which will then try to break up to the upside. So let's take a look at the futures. Let's see what they're doing. The futures actually have a beat candle on this. So let's watch this. I'm actually watching. It's 29 seconds. I will have to do this manually if it beats, but that's a decent structure for us. Let's see if that works. It's got to hold it though. I got 15 seconds. I got to hold the highs. The highs in this case are not being held. What's the high on this? 75. And it ain't doing it. Ain't doing it. 75. Okay, now it is. Now it is. Okay. So I went in on this because it did hold the highs, and boom. And now it did. So, and that, by the way, is really, and now it just of course blows up. And I actually should have had this at 7, but I had I had the prior 10-5 scalp here to set myself up. It really pays to just wait 1 to 2 seconds post, if you're doing this manually, post close, because if it's truly strong, you'll follow it. If it's a little bit of a pullback, you'll get a good price on the fill. But regardless of both ways, it really worked nicely here. I don't know if any of you got a chance to trade that, because there was a quick setup. But it definitely worked if you did it. Even if you're in it right now, you're still net positive. If you came in late, and I think it's going to stretch out a little higher. So Paul got 5 on that. Yeah, good for you. Paul, are you trading futures with me, or are you trading CFDs? CFDs. Okay, good for you. Anybody, Cheryl, you trading futures, right? Anybody else trading futures with me, or is everybody else on the CFD platform? Yes, what, Galton? Yes, futures or CFDs? Yeah, Carol does futures, right? That's interesting. Oh, look at this. Oh, look at this. All these Americans. Yay for futures. I was just thinking, by the way, tell me, I'm like really, if I had a moment, I would call the guys to see me. Tell me how stupid it would be for CME not to do micro Bitcoin futures. I just think that they're just petrified because liquidity is, the volatility is so large that I don't think they can make tight markets in it because they really need to attract a lot of market makers to it. But tell me that the micro, the way we have it on the S&P and Nasdaq, wouldn't be an amazing Bitcoin contract where like essentially it would just trade one Bitcoin. Like the micro would just be one Bitcoin at like the usual CME margins. So you'd only need to put down like $1,000 or well, no, they would have to keep the margins probably at least 1,000 because the volatility is so huge. But yeah, I mean, even at that, it would be great. Wouldn't that be? Then you could trade. Then you could trade. You could trade bid ask on the exchange based. It'd be like awesome. Anyways, as I said, this as I thought, it would start moving higher. So even if you were late on the trade, you would have made money. Oh, seriously? Karen says there's going to be a retail ban. Seriously? On like you couldn't? Wow. Oh yeah, I wasn't watching Dow. Thank you, Connie. I really wasn't watching Dow. Let me see what a Dow did. Oh, you just took the turn, the Dow turn. The Dow turn was also really good. But yeah, no, that's awesome. That's awesome. I just you know me, I can only do one thing at a time. Twice. Oh, where'd you take the turn? You took the turn here? Let's see. Connie took a turn. Let me see if Connie did this. Tell me what you did. You took, here's the Dow. So you took the turn here, right? And then you took the turn here on the beat. This beats the red. You get long here on just a big extension, right? Great trades. Great trades. Awesome. The next one on this one, you took it on this one through when it broke through here. All right. Now you were chasing a little bit, but that was still good. All right. All right. You get a clap and a half for that. But still very good. They just, and the whole point is that the other thing is when you're buying out of a downtrend, that's the whole point, is there's always room for improvement. There's more room from a downtrend than there's room from the uptrend, right? Like because of the uptrend, there's much more positioning to the upside. So the extension generally is going to be smaller than the level from here to here is larger than probably level from here to there at its peak, of how it goes. That's just sort of really interesting. So, I told you I've been listening to the Schwager book, and let me just look at all the CFDs. Let's see if we got anything set up here that's of interest for us. Looks like NAS is setting. Is this setting up on the futures as well? Yeah, it's setting up another futures trade. All right, let's try. This one we can actually do legitimate futures trade. Okay, let's see if this. So we have 18 seconds. I've set myself up for the break of the highs. Let's see if it holds. If it doesn't hold, it doesn't hold. It's fine. We got 8-9 seconds. It's got to break 81s. Let's see. Nope, doesn't hold, and that's fine. And we'll just, we'll let that go. No harm, no foul. I'll keep this alive. You know what? I'll keep this alive probably for about 3 periods because this is still the beginning of the market. A lot of volatility. I really don't want to be holding this for long. But this will automatically disappear in three periods if it doesn't work. Really choppy market, by the way. Like honestly, I just remember that basically we've been trading 1950 to 1200 like a snake, you know, all the way through. And this is, you know, so who's it? Rob was telling me about, you know, long-term Bitcoin. So if you're in an asset that goes like this, that goes straight up, then being an investor is the greatest thing in the world. But if you're in an asset that just zigzags, and you're an investor in that asset, you've made zero money at the end of the day. But if you're a trader, in a zigzag asset, right? You made money here and here and here and here. It's like you take the zigzag and you literally stretch it open like an accordion into a straight line, and it becomes like a massive, like the zigzag line is actually much longer and much bigger than the uptrend line, right? Than the huge uptrend line, and that's super cool, right? That's the advantage of trading, is that you can literally make lemons out of lemonade. I'm watching this thing. It looks like we're starting to try to come back, see if they can rally it. Trying to see if they can hold it 14, 15 minutes. Let's see. To be honest with you, the price action today is super super slow and not great. I'm not loving this trade. I'm going to cancel this out just because I don't even want to be in the position. Maybe this, you know, maybe they're going to start building an uptrend here, but I'm going to leave this this price action to itself right now, because there's very little definitive, clear structure right now. So no point in trying to trade noise. But you know, from the turns to just the classic trades, if you're trading the zigzag, think about how many more points that you can do versus if you were just in a flat market. That's the beauty of trading. The beauty of trading is if when the market does nothing, you're making a ton of money. Whereas with investing, and when the market is trending, you also can make money, because obviously we're going to catch all the trend moves. Maybe we won't catch the 0 to 100 on the trend, but we'll catch the best tops, right? So yes, maybe you underperform a super strong trend, because if the guy buys at the bottom and sells at the top, he's going to be like 30 points. But my suspicion is you will not underperform that by a lot, because you'd be popping in, popping out, popping in, and the addition of your trades could more or less equal the cumulative P&L of his investment thesis. But in the 70% of the time, when something zigzags and there's literally no return for the investor, and there's all this return for trader, think about how much greater that strategy is. Like, in a way, the way to think about all of this is you can take long-term money, put it into an ETF, and let that become your investment thesis, and you're hoping for a 10-15% annual rate. And then you trade, let's say, a small part of your account, but on the years when that ETF does nothing, the small part of your account could do as much as 25 to 30%. So you're literally complementing the return with much less risk and much less variability. I guess on a longer term basis. I'm just riffing, but you guys get the idea. Really quiet, and you see Nas pulled off the highs here, kind of putzing around. Not much really going on here. I don't know. I think we squeezed out 10, and then maybe is all we can get on the lemonade thing. You guys did better than I did, because you took some nice big moves. What is this thing? I want to go back. Sorry, Karen, I got distracted. I wanted to look at this whole Bitcoin thing you were telling me about. So direct to retail investors in a move that says it will say the targeted. Say, really. This is so bad. So nobody's going to be able to trade Bitcoin? That totally sucks. It's probably going to be one of the most valuable assets in the next decade. That's just so dumb. I mean, if people are allowed to go, I I got to believe that's going to change. If this thing, if Bitcoin starts going through 20,000, there's going to be such a huge demand for the regulator to back off. They will. All right. Otherwise, we got nothing here, guys. You know, the Nas is back down. You know, we're just, you know, we're zigzagging. Now, you know, I said to you, I'm leery of trading the short end of the trading the short term, because I found that the short term basically is kind of the reverse of the long term, where what you're looking for is the first low that breaks the low of the green, right? So in this case, you would get short over here, and it works okay. It works okay, but remember, there is a natural trending bias in equities. So I just find the long term is like one of those, you know, 4 out of 5, 5 out of 6 kind of trades. Even at worst, it's like a 4 out of 6 kind of trades. And that's a consistent, it's basically buy the fucking dip version on a 1 minute chart, right? Kind of a thing. Whereas the short trade is less accurate. So it works, but you got to time it perfectly. You definitely want to have at least 2 arrows in front. You want to see some exhaustion. I mean, you know, it's just a difficult, more problematic trade, in my opinion. But I don't want you to dissuade you from it. I just stopped doing the short, you know, picking the tops, because picking the tops is much harder than picking the bottoms, and it makes sense. Even in an uptrending, just like with Bitcoin, you know. Oh, this is actually a great example. Let's look at Bitcoin. Okay, so this is a great example. Let's look at this. This is why I don't like to pick tops in a strong uptrending market, right? So let's go to Bitcoin. Let's do the 1 minute chart, right? So we're getting, is this Bitcoin 1 minute? Yeah, 1 minute, 1 minute, 1 minute. Okay, so blah blah blah. It's you know, turn. I want to see if I can pick the tops. So here's a good example of where why I don't like picking tops. Okay, here's a huge big move. So actually, in this particular case, my strategy really keeps you out of trouble, because this doesn't break any lows, right? This doesn't break the low here, this doesn't break the low here, this doesn't break the low here. You don't have any signals. Doesn't break the low here, doesn't break the low here, doesn't break the low here. First candle that breaks the low here, right over here, right? You're short over here. But even if this is kind of close to the top, right? Look what happens. Immediately you get a reverse to the upside. So if you got short over here at 172, you had to suffer like 200 points, or like 100 points, 100, 200, 272 would be your stop. 100 points worth of adverse price action, right? Before it eventually comes down to like 35 points, you know, in the money for you. Like it's you have to just risk 100 to kind of make 35 on a very problematic short, right? Like a tough call on the short. And that's why, you know, like if you came in over here on the second short, yes, you had a little bit of a better positioning, because, you know, this broke the lows of this green candle, so it came in over here. So you came in at 208, and you got, you know, like $25 with very little movement against you. So is it possible? Of course it's possible. The thing about it is, when you try to pick tops in a strongly uptrending move, the first or the second is usually always the weaker signal. And it's only after you've had like 2 or 3, you know, signals, like maybe 2 signals, when you've gotten the signal, that you have a chance to kind of pick the tops here. Even there, by the way, like the third, this is the third signal in the sequence. If you get short over here, 192, it still has this one last burst against you before it finally collapses, you know, for a turn. My point is, there's a lot of easier ways to trade than trying to pick tops in a strongly parabolic move, right? It's just, I used to love to do it, and now I stopped doing it, and it literally removed 90% of anxiety and pressure from my trading. It's just such a toxic little structure to want to trade, that the benefits are definitely not worth the pain, you know. So I just kind of wanted to show that to you. All right. In the meantime, we're now definitely turning down, right? Another good example, by the way, of how my strategy completely kept you out of a false positive, right? We did not even come close to taking out the highs on this candle, so it never would have triggered. Even five periods, 2 periods, 3 periods, never would have triggered. Now we're just straight up down, right? And now I'm actually going to be very cautious. I'm going to watch this. I want to see, first wave up, second wave up, and only then I'm going to try and see if I can pick a bottom on this move to the downside, because we clearly came down on the move here. So that's pretty much it, guys. Any final questions? Anything on your mind? What do you guys think about the Bitcoin? Bitcoin trading on the 1 hour chart with our structure. Anybody want to try that? Because I will have the algo like beginning of December, and we'll be able to actually do that, and it can generate trade. It'll certainly be able to generate signals, which will be really good, and then we can generate trades off of that. I've actually no, I think as I said to you, Krasi, we can't trade 1 minute unless all of us open account on Coinbase or Bitfinex. Like you cannot trade the 1 minute chart unless it's exchange-based product, because of the spreads. So the only way to consider Bitcoin would be like to trade it on a 1 hour with a minimum 300 point to stop. I would say you probably wouldn't even trade it with maybe 300 to 400 point stop, 300 point target kind of a move. Like really big moves, 1 to 2% moves. Let's see how we're doing on the NAS. So I'm not taking this straight because I got to go, but like an interesting possibility here on the DAX, right? It's essentially been an uptrend, shallow retrace. The green takes out the red. You got long over here. You're already in the money, and it's I think if you came in at like 660. My dog is coughing. Sorry. What was the close here? 60. Yeah, came in at, let's say 61. You have a reasonable chance here maybe to make 67, 68, certainly on the move. So you're 63, 64, it has a chance here to go. No, the algo is gonna do our classic trades, which is failure buys, failure sells, right? So it will actually pick the breakout points to the upside in the move. And we're at 66 and almost 67 while I'm talking. So like, let's make it 67. Okay. So I'm gonna 67. There we go. So I am calling this my virtual hit. I'm gonna count this my virtual hit in case, just because it's been such a quiet move. So I'm calling this +7 in the DAX while I'm paying any attention. What's DSL? We'll have some DSL. What does that mean? Oh, dynamic stop loss. Oh, right now it doesn't, but it'll be easy enough for us to add it. Like right now, I've just added a few. It's a very, very simple. I want it to be a very, very simple, clean functionality. Oh, look at this. And by the way, it's really nice moving. That's a great turn. So like just another way, I'm sorry guys, I'm popping all over the place, but I just want you to serve my final thought. The turn trade, right? We have a strong, everything else is weak. DAX is the only one that's kind of strong. It has this very, very tiny little dip. And then the buyers tell you, hey, you know, we're going to take out the sellers. They take out the sellers. Look how great a signal that was. It was just like a beautiful, clean signal. This is what I want you guys to start looking at. And there's no way, there's just absolutely no way that this is programmable, right? I am like, the more I am looking at all this stuff, the more I realize that anything on a short-term basis has to be 100% discretionary with a mechanical aid, with a robotic aid of entry and structure. But you know, that's why we win. We win because we're discretionary. Oh, good job, Connie. Yay, yeah. I'm so glad you banked that one. Good for you. But yeah, I mean, you know, this is where the eye is. This is where the human brain is just still better than the computer brain. So I want you guys to start looking at those ideas for the turns. Oh man, what's going on with you? My dogs are just like a mess today. Oh, dynamic stop loss. Yeah. So Crossy will have a dynamic stop loss. I mean, and it will have a probably two exit structure, like a short exit and long exit. We're going to add those overlays a little bit later. But for now, the main thing about that algo is it's just going to take the classic buy failure, sell failure trades. Those, by the way, work super great. When I've just left that on, like when I've tested that on the 1 hour chart, on currencies, on everything, just staying to our classic structure is super, super profitable. It's just boring as all hell. You know, because like, you know, like on a 1 minute chart, yes, we certainly have opportunities, but like, you know, on a 1 hour chart, you get like one trade every 3 or 4 days. That's why it's great for programmatic trading. Is that a request, Eli? You see, you'd like to set the lot size as a % of account? Is that a request? You know, so that's very possible. I think, you know, okay, I think I basically gonna do what I've done with a lot of other algos, which is, and this always happens. So the only solution I have for all this stuff is the following. You know how like I have the 1X, like our beautiful little applet, it does just one effing thing, it does it well, and it doesn't do anything else. It just has the vol filter up, the close, the single entry, single exit, just move the stuff, just stuff for me, right? And then we have the 2X one, right? Good job, Galvin. So, and then we have the 2X one that can manage exits and do, you know, complex volatility structures, whatever the hell you want, right? So I think I'm going to do the same thing with the algos. That I'm going to have the simple. I'm just going to do single entry, single exit, buy fails, sell fails, algo, and then I'll have the complex version that will have dynamic stop losses, 2 exits, % of algo set. Because I find there are 2 types of people. There are people like me who want simplicity. And complexity just annoying. Like the more features I put into an algo, the more opportunity for screw ups there are. And then there are other people who want to create the most complicated gadget there is and run that. So I think listening just from your requests and just seeing how it goes, that's going to be the solution. We're going to create a simple version that just does one effing thing. And then I'm going to create a complex version that does 55 little things that you guys want to configure, like a Rube Goldberg machine. Look at that move in a DAX. What a nice move. All right, excellent. I'm so glad everybody banked. By the way, notice that look how well everybody's doing in the room. There was just day after day, you guys coming in, we're banking. It's really, really good. You know, practice makes perfect. Let's give everybody gets a clap today. Everybody gets a virtual clap. Oops, it actually helps if I know how to spell it. Okay, because good job, pat on the back. Small habits. All right, yeah, no, I'm down for that. So speaking of that, by the way, speaking of Fami, so we're not on tomorrow. right? Because I got the money show. I have the money show thing. You guys are welcome to. I'll post the money show link if you guys want it. So we're not on tomorrow, and then on Friday we're actually doing a special live trading. Kathy and I, like at 8:15. She wants to trade the Canadian retail sales, and I'll do my usual stuff after she's done, and that's going to be an open live trading for everybody. So like it's going to be a global live trading. So be sure to come in for that, guys, because we're going to be talking about a lot of cool stuff. All right. So that's the so we actually ended up this week basically doing really well. Yet another winning day for us, and boom, we're 3 for 3 today. Thank you, guys. Thank you so much for hanging out. Thank you so much for trading well. Everybody have a great day. Enjoy.